Good afternoon, everyone, and welcome to the second ESG panel. My name is Alastair Marsh. I'm a reporter here at Bloomberg covering ESG. I'm delighted to be hosting a panel today with Denise Odaro, who's Head of Investor Relations at IFC, the International Finance Corp, and Guillaume Pichard, who's Managing Director of Capital Markets and Treasury at the Quebec Ministry of Finance. I wondered, as a way of introducing yourselves to the audience, to our viewers today, if you could describe each in turn, and Denise, I'm going to ask you to start, please. Describe your ESG strategy and your approach. Give some specific insights and best practices about how ESG is implemented in your institution. So Denise, please, enlighten us.
Thank you very much for having me. I'd like to share with the audience that for those who are not aware, IFC's history in itself is intertwined with ESG. And we opened for business over 60 years ago when the world was in a different frame of what we now call Build Back Better after World War II. Our mandate has been private sector development. And for that, to achieve that, essentially that's meant creating a path for others to follow in our member countries, which is around 184 countries. And so IFC's ESG policies, guidelines and tools are widely adopted as market standards, which is one way that IFC helps raise ESG standards and level the playing field within our emerging market member countries. Now, specifically, I would say that, as the audience no doubt appreciates, doing business in emerging markets comes with challenges. And some of these seemingly are the ever-present risks that we now call ESG. So environmental, social and governance due diligence of a project and its financing were and remain important as part of our credit analysis for every single IFC investment we make, be it loans, bonds or equity. And secondly, we also provide an array of guidance for the market in general. And that's a holistic management, sort of how do you manage potential or actual changes to the environment or, the surrounding community in workers and improving governance. And thirdly, we also provide integrated ESG advice. IFC's performance standards were in fact the blueprint for the Equator Principles, and I can talk about a bit more about that as we go on during this panel. Nearly 90% of our clients believe that ESG support is key to helping them reach their long-term business goals. And I'll end with our most recent innovation, which is within, would you like me to stop there? Because I was going to talk about just the ESG survey.
Tell us the last one.
Okay. Our most recent innovation, which is only 2 years old, we were the first issuer to begin assessing underwriters based on their ESG. And we are now doing this on an annual basis. And the results of this assessment goes into our mandate selection process.
Fascinating. Okay, well, we're going to get into the sort of nitty-gritty of bond market mechanics in a minute. Cost of issuance and selecting managers sounds fascinating. Guillaume, let me ask you, though, the same question. Perhaps you could introduce a little bit your approach to ESG.
Sure. Well, working for government, as you know, one's aware that we do engage in a broad spectrums of field in ESG. And back in 2017, at the Department of Finance, we decided to engage in a green bond program and set up something that would reach high standard of the market at the time and continue to reach for a high standard of this market as of now. And the goal was to highlight projects inside the government that really have a direct impact on the environment in terms of emissions, trying to address climate change at the same time. So far it's been I would say, not shy to say, it's been a real success. We've been able to issue 6 green bonds for a total of $3.3 billion. Our last one done in May was a $500 million CAD issuance, the first 10-year issue for a province. And the proceeds of these green bonds mainly so far have addressed projects in the public transit area, energy efficiency, and lastly, we just dispersed a good amount towards a project that touches a little bit on on the S of the ESG universal, it's a universal accessibility program to refurbish or just put up to date some metro station in the area of Montreal, so they'll be more accessible to everyone riding the metro. Look, going forward, what we do want to is to broaden the specter of project eligible inside our green bond program, trying to see if we can do more in terms of energy efficiency, green buildings, or down the road, we don't have one right now, but it address climate change and resilience. So we'll see where it takes us from there.
Okay, fascinating. Thank you. Well, you've both spoken very articulately about the concrete things that you're doing, and it's encouraging to hear. But one of the kind of a narrative that I hear frequently at the moment is this idea of questioning the effectiveness of ESG, i.e., is it a great marketing tool for Wall Street salespeople, or is it something of substance that can have an impact on things like social mobility and on the climate change and so on? And I've been, one theory I have is that for ESG to be effective, especially in the debt markets, it should, in theory, have an impact on the cost of capital or on the cost of issuance. And I wonder if you agree with that idea, and if you already see it happening. I mean, Guillaume, perhaps you've mentioned about selling, green bonds recently. How do you think about this?
Well, when we first starting to do this in 2017, I must say we were on par with our regular curves of bonds, but gradually the market evolved, and the demand was just so high for green bonds or ESG bonds in general. We get, let's just say, we only have room. The last one I mentioned for 500 million, we had a book close to $3 billion. So at one point, you are able to price inside your regular curve. I must say I can price it around 2 basis points right now. So cost of issuance is going down for green bonds and other ESG bonds. But maybe another thing is that, does it have an impact? And inside government, I must say, does, because there's the critique we get is you're going to fund these projects anyways. Yes, we are going to fund them. However, look, we're looking to make the projects we're going to fund anyways better for the environment. We're looking to qualify them for our green bond program, and that's something we didn't look for 4 years ago. So I think that's what the green bond space has brought inside government for us.
Okay. And Denise, from your perspective, also, I have seen an issue in the markets. You mentioned something very interesting about manager selection or underwriter selection a moment ago, which I guess talks, if I understood you correctly, to sort of, assessing the credibility of different market players on issues, on their kind of ESG credibility. How do you think about? Well, let me ask you 2 questions, if I can. One is, why did you do that? And tell me a little bit more about it. But then secondly, maybe you could also address this issue of kind of the effectiveness of ESG and kind of it being priced into the market. Your thoughts around that?
Well, I'll turn it back ways and I'll answer the latter one first. Okay. So essentially, I would say I think of it in 2 ways. So one, the question around what's the additionality of ESG, and IFC's role. We are we're essentially a bank, aren't we? So we are making loans and equity investments and what have you. And what we have seen with our own portfolio is that better ESG performance has equated better financial performance in the long run. And so I think it's no longer a moot point. I mean, even though there seems to be this debate around that, but by and large, what we are seeing is that studies are showing that. So that's on the lending and the investment side of things. And again, in particular, I think the markets that we operate in as such that I would say are the muddy waters, that should you not consider ESG, then it really is folly going in blindsided into these markets. And then I would say on the Treasury side, in terms of our own funding program, we the reason that we began, I mean, we are a prolific and have been a prolific sustainable bond issuer. We play many, many roles in this market, and I'm sure the audience are aware of. Our green bond program is now $10 billion outstanding, in issuance, forgive me, not outstanding, about 5.5 outstanding. And what we are doing is even beyond our green bond program. So we have a $17 billion funding program on an annual basis. We are now selecting underwriters for the entire program based on numerous variables, but a key one being, well, what is their ESG standing? And by that, it goes beyond how well can they structure and sell our bonds, but rather, are they walking this talk internally and externally? So it's really an initiative that I think we will begin to see a lot more of. That we have seen a number of issuers who have come to us asking how we're doing this with the intent to replicate this. So I do think that from where we are looking, this is something that is here to stay.
That's very interesting. A follow-up, if I may. I know we weren't planning on talking about this, but it's very fascinating. And that is simply, are there some underwriters who then who've had to be excluded by IFC, or are there others who've had to kind of perhaps up their game or work with you to up their game on these topics? I mean, these sort of incentive mechanisms for doing better on ESG is very interesting.
So it's almost similar to the debate around, engagement or divestment. We're taking the engagement route right now, and because the weighting of the ESG component makes up 10% of the overall dealer assessment and decisions. They are, as I said, other variables that are considered. However, we are engaging very fully with particularly those dealers that are below average in their assessment. And so that's taking up a great deal amount of time, as you can imagine. We sent the survey out to about 60 banks. But the good news is, I will say, that we are seeing, these conversations go beyond the debt capital market desk. I mean, it's going all the way through the institution, and that in itself is a measure of success for us. Is this during, in the hallways of these banks, are they having this conversation? Is no longer, kept within the CSR department and the marketing divisions.
Great. Okay. I mean, I was interested to ask you that question because going back to the earlier point about is ESG effective or is it marketing? There's a sort of, I would call it a scourge on the industry, or a potential reputational stain always there being greenwashing. No one wants to be tarred with that brush. And I just wonder, yourselves as sort of big issuers, and big players in the market, if this is something that and this is a question to both of you, if this is something that you're kind of constantly on guard about, and how you think it sort of materializes, or where you see it crop up. Guillaume, maybe I'll ask you since I asked Denise the last one.
Yeah, sure. Well, yeah, it's something that's in the back of our mind. You'd never want to get accused or just of greenwashing. So, look, right when. And I think all major issuers are taking the steps I'm going to go through it. Following the green bond principles, following international guidelines that are coming into play, like the Canadian taxonomy, like the taxonomy in Euro. So that's one thing to do. For ourselves, look, we've set up our green bond program. We have a second opinion on it by Cicero, which is dark green. We also are asking our Auditor General to really tell investors that the proceeds from the green bond really did go to the projects that were highlighted. That's something that, if Auditor Generals around the planet, that's not something that it's done lightly. It's done very meticulously. And the other thing I would tell some investors who are new or just coming into the ESG space is, if you see an issuer, ask him the first question: is your potential green bond, your potential ESG bond, is this going to be a one-off, or what's your plan going forward? You've set up a program, you've set up a framework, but what are you going to do? What's your end goal on this? So if the issuer doesn't have some clear answers, has only planned for a one-off, we'll ask some more questions. But to been in this space for quite a while now, I haven't seen major issuers greenwashing. I think it's something we're very cognizant that we're never going to go there. And like I've mentioned in my introduction, we want most big issuers want to bring high standard quality product to the green bond space and the ESG space.
Right. Okay, thank you. Well, let's talk about product, actually, because that's another thing that's been very interesting over the past year, 18 months, and just the proliferation of ESG bonds. I mean, we have green bonds, we have sustainability-linked bonds, you have blue bonds, all kinds of different coloured bonds. I mean, it gets a little bit confusing at times to try to keep up.
Yeah.
Maybe you could tell me, Guillaume, maybe I'll start with you. Are there other, within your own sort of funding programs, are there other ESG, have you issued other or plan to issue other ESG type debt? Or if not, do you have opinion on these other types of bonds?
That's a very fair question. Look, we want to stick with our green bond label. As a government, at the end of the day, there has to be a reason why we raise debt instrument, which a green bond is. And we went down the road of infrastructure projects, which we already borrowed for. And if we do have some social or some governance projects, well, we'll use our green bond program and platform to do so, like we've done with the recent project of the accessible university in accessible. Sorry about that, but the project I meant, and in the for the Montreal Metro.
Yeah. Okay. And Denise, then maybe turning the same question to you, could you maybe talk about sort of how ESG momentum that we've been describing has altered your funding programs? Of course, the green bonds, but are there other types of sustainability-linked social bonds, blue bonds? I mean, as I said, there's a whole array. How do you think about it, and how has it been in practice for you?
So I wear two hats here. One as head of investor relations for IFC, but also I am the chair of the green bond principles, so the suite of the green social bonds, sustainability linked bonds, etc. And, so on the IFC side, we do have two active programs, the green bond and social bond programs. And what I will say is that because of the work that we do, which our mission is capital market development, one of our missions, and of course, that has meant that over the last 10 years, we've played a very significant role in promoting the market in terms of supply and, of course, providing capacity building and investor education. So on the Green Bond Principles side, we do an extraordinary amount of work in the Executive Committee in terms of leading, of course, with the support of ICMA as a secretariat, in terms of providing the market more guidance around what is what. And essentially, the updates you will see to the principles that we put out a few months ago now has this diagram that paints it out. Because I do agree with you, it is one of my pet peeves, is the alphabet soup of this entire sector. And that goes beyond green bond, beyond the bond market, into ESG more generally. Yeah. And so I hope that the audience understands to think of it in this way. So you have the umbrella of sustainable bonds, which are bonds that essentially embed sustainability aspects into them. And then you have green bonds, you have social bonds, and then linked bonds, right? So use of proceeds and then performance-based. So depending on, you can call as an issuer, it's your decision if you want to call it a purple bond or blue or whatever it is. But the market at this point, the best practice is following the frameworks as they currently are. So it may be a blue bond because, of course, it has, exposure to marine or related use of proceeds, but it is essentially a green bond. You've just decided to call it a blue bond because the Green Bond Principles covers that use of proceeds. And similarly, on the social bond side, it is a wider array of use of proceeds. And so you may have, as investors, a good example of this is the investor interest, particularly in gender bonds. but it is a social bond. But you may choose to call it that if as an issuer, so long as, and I think this goes to a point that Guillaume made earlier, which is how sustainable, for want of a better word, is your program? Are you going to be a frequent issuer or it's a one-off? So if you do have a pipeline of projects for, you name it, gender or blue, then fair enough, it makes sense. Otherwise, I think it is somewhat perhaps punitive for certain investors, because at every point you're having to re-educate investors what this new name or new brand has underneath the hood.